So problem 3, we will now move on to the some of the expenses, incomes, some of the items that we had not included as of now. We've already taken care of things like salaries, rent, printing and stationery. Those come under our operating expenses, right? So if you see here, things like salary, all of these will come under schedule 4. Okay, this is schedule 4, operating expenses, rents and taxes, printing and stationery, also schedule 4. Same way, legal expenses that are related to claims were taken under schedule 2. Whatever was related to expenses, we took it under this, right? So under claims incurred, and the remaining legal expenses we showed them under operating expenses. Okay, so this 20,000 came under schedule 2 and the balance 40,000 came under schedule 4, right? Operating expenses. Fine. Now there are certain other things, some other expenses, incomes, there are losses given here that don't really fall into any of those other categories. They don't come under those schedules, but these are other expenses that are also shown in the revenue account. Like sometimes we show those expenses in the revenue account besides the main 4 schedules that we have. Schedule 1, 2, 3, 4 related to premiums, claims, commission and operating expenses. We may have certain other types of incomes and expenses that are given to us. For example, take over here, Indian income tax paid. Okay, now this is your tax that has been paid by the company, and this is going to come under something called other expenses, not operating expenses, not schedule 4, because it's not like a day-to-day business expense. Your tax is not a business an expense that is related to your day-to-day operations, right? Your trading or manufacturing activities. So any interest that has been income tax that has been paid will go as a type of other expense. Okay, same way, if you have interest, dividend and rent, now this is a type of income. Okay, although I know it does not specify very clearly whether it is an income or expense, but we consider this item to be an income. Fine. So this goes under other expenses. Same way, this will go under other incomes, or it will go under incomes under your once we write the premiums earned. Okay, so any interest received, dividend, rent, whatever the insurance company has received, this amount is going to go over here. This is clear. Now at the same time, you are given something called income tax deducted at source, isn't it? So this income tax we are going to add back to the interest, dividend and rent income and show the gross amount. Okay, because this is something called TDS. It was deducted from these incomes initially, and then later on, of course, we've already shown how much income tax was paid, isn't it? So while showing in the income side, we show this interest plus the income tax deducted at source. We're supposed to show the gross amount. Okay, and of course we have other expenses or losses like bad debts. Then you have a double income tax refund, which is an income. Okay, bad debts will be expenses. This will come under incomes, and also profits made on the sale of motor car will be an income. Later on we have the calculation for unexpired risk also. We are going to look at that. Now let's see here. All these items we are going to transfer to our revenue account. So in the revenue account here, let's take all of these items that are calculated for the different schedules. Okay, so premiums earned. We'll take this first one by one and then go back to all those other unrecorded items that we have. So premiums earned, Total is 25 lakh 65,000. Let's record whatever amounts we already have. Okay, we'll leave a few more lines for all those other items, other incomes that we have. Okay, so all other types of incomes are going to come here. That means things like double income tax refund, then profit made on sale of the motor car, and interest, dividend, rent, whatever gross amount is there, all of that will come over here. Is that clear? Now, next we have all other types of expenses like claims, commission and operating expenses. So let's see, claims incurred were 17 lakh 81,000. Let's transfer that for schedule 2. Then you have commission paid, total is 1 lakh 47,000. Operating expenses total 3 lakh 41,000. Okay, so far the major expenses have been recorded. Okay, and besides these expenses, like I told you all, we have other expenses like bad debts and income tax paid. All of these that are going to somewhere come over here, they're going to show up here. Okay, so far whatever information was already there has been recorded. Now let's see where this other information of other types of incomes and expenses is going to come. So over here, up to all these schedules we have taken rent, rates, taxes, salaries, printing and stationery. Indian income tax paid. This is an other expense. Like it's just like how you would have income tax provision in case of your PNL account. Same way this income tax paid will also form part of it. Now this is income tax that has been paid only on this marine insurance business and not of the entire business or the entire company. Fine. So after operating expenses we add a new category called other expenses. Okay, and under this we are going to write what type of other expenses. So Indian income tax paid amount is 2,40,000. There is no schedule number to this, so we are going to write it as is, 2,40,000. Then what else do we have? Income tax deducted at source. Now I told you this interest, dividend and rent is to be considered as an income, and if any income tax was deducted at source from this income, that has to be shown, that has to be added to this amount and shown in the problem. Okay, so in this case your interest, dividend and rent will come somewhere here just before you write changes and in provision. Interest, dividend and rent. Now which amount to take? You have 1,15,000, the net amount, plus add to that the income tax deducted at source. So 1,15,000. I'll write here as to how we arrive at this figure, 24,500. So total gross amount, we'll call this the gross amount, okay, comes to 1,39,500, correct? 1,39,500, not to be underlined yet. Then we have, let's move on to the other side, things like bad debts, legal expenses we've already taken. So things like bad debts, double income tax refund and profit on sale of motor car. Now bad debts is an expense. So just after income tax paid, you can show bad debts. Amount of bad debts is 5,000. Correct? So other expenses, this is one. Income tax paid is one, and bad debts are another type of other expenses. Okay, then double income tax refund. Now refunds are an income, meaning you paid a little extra tax to the government, thinking that your tax liability may come to that much, and then at the end of the year, when you really actually made the profits and you paid taxes, calculated your taxes, you realize that you've already paid too much in tax to the government in advance. Okay, so you are liable for a refund. Now this refund becomes an expense over here, and soon after premiums we will write, just adjust this, other incomes. This is somewhat like previously what we have done is other expenses. So other incomes, what are they? One is the double income tax refund. Amount is 12,000, show it here, not to be underlined. And the other one is profit on sale of motor car, 5,000. Okay, so below this, in another line, we will write profit on sale of motor car, amount is 5,000. Is this clear? Okay, so that completes our posting of all expenses and incomes. Only we have to calculate now the balance of funds on, the unexpired risk in the previous year, unexpired risk for the current year, right? So this is what our new revenue account looks like. We have certain other types of adjustments here besides the 4 schedules. We have other incomes. Then there is also income from interest, dividend and rent, and we always have to take the gross amount and not after calculating the TDS. Okay. Changes we will calculate now, and all other schedules are there, as well as all other expenses, bad debts and your amount for income tax paid. So is this clear? We will now calculate what is that reserve, the provision for unexpired risk.